So we're on the 15-minute time frame. Let's take our Fibonacci extension tool of wave 1, okay, from the top, retracement of wave 2. And remember, wave 2 cannot retrace beyond the 618 of wave 1. Measure it for yourselves to prove it to yourselves. So you get wave 1, wave 2, wave 3 should come to at least the 1 Fibonacci extension. And so we haven't gotten there yet. But I expect wave 3 to be an extended wave. An extended wave within wave 3, okay? Not to confuse anybody, but you can also count 5 waves in wave 3. And here you've gotten wave 1, wave 2, wave 3. Here is truncated. It only extended. This wave right here is what I'm talking about. Sorry, right there. It only extended to the 1 Fibonacci extension of this first wave. So I expect the 5th wave of wave 3. Sorry, I said, okay, the 5th wave of wave 3 is likely to be an extended wave because this is normal. This is truncated. So I expect an extended wave. So all in all, I do expect wave 3 to extend to at least the 1618 Fibonacci extension. It's very unlikely, looking at this wave 4 correction, that wave 3 only end up at the 1 extension. Okay, it should come all the way to the 1618 at the very least. It can also go up to the 2, but I don't expect it to go to the 2 because wave 5 needs some space. And we have this big resistance here, right? This 3 months resistance that we've drawn out. Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 29th, 2022, and Bitcoin is looking like it still wants to go up just a bit, okay? We have yet to hit our target from yesterday. Yesterday we said the target was 39K. We're still not there yet, but it looks like we're heading that way, all right? If you're subscribed to the channel, you'll know that we discussed, we're on the 15-minute chart, by the way. We discussed an important pattern that was not only in Bitcoin, but the entire crypto market pretty much. And we call this in Elliott wave principles, or Elliott wave theory, a zigzag pattern, where you have an A wave. So these are corrective waves. Corrective waves always come in 3 in Elliott wave theory. And so this is the first, this is the second B right here, and then the third will have to come up, okay? And basically what's interesting about this zigzag correction pattern is that it's in a 5-3-5 construction, meaning you can expect 5 waves down here, which we got, 3 waves in correction, 1, 2, 3, okay, and then 5 waves up, okay? So right now we're just counting 5 waves up, and we're in the middle of the 3rd wave, okay? And price has pretty much just been steadying or stagnant, stable in a small range for about 16 hours, okay? And if you're subscribed to the channel, you'll know I always say that when you see price steadying in a small range, that means, in terms of Elliott wave theory, you're in a complex correction. So that's what a complex correction is. It's prices kind of consolidating, and buyers and sellers are deciding what to do. Some are taking buys, some are taking longs, some are taking shorts, some are selling, right? But there's a bit of indecision. And so that's what it translates to in the overall market sentiment, okay? But Elliott wave theory actually gives us more precise tools to read this. And again, what I said in the beginning still holds true. A complex correction is a correction, so it comes in threes, either single threes or double threes or triple threes, okay? And so that's what we call a WXY or a WXYXZ. And so going in on the 5-minute chart just to see a little more detail, and we're going to zoom out in a second, so don't worry, we can see that we do have some sort of triple three correction going on, it seems. So W, right? And this is all against the grain. So a correction. So the trend right now, the local trend is up. So the correction would be down. So this is the W wave. This is the X wave. This looks like the Y wave. This looks like the X2 wave. And so I would expect a Z wave. And this looks to me like a simple triangle, right? And we can expect triangle corrections in wave 4, which we're in, right? And we can count the waves in a second. So this is close to breaking out. So this is how powerful Elliott wave theory is. You can zoom in on a small time frame. It's time frame agnostic, and you can see patterns and read these corrections, these consolidations to which most people, it's just noise, it's just chop, it's just confusing. And this, I mean, it's super, super powerful if you really learn this technique. Anyway, just so we know where we are in this 5-wave impulse, remember we said we get 5 waves in A and 5 waves in C, yeah? So we just take out our Elliott wave impulse tool and we can clearly count a 1 wave here, wave 2, retraced not beyond the 618 of wave 1. And wave 3, it's not yet done, but we can expect wave 3 to come here. I'm going to finish doing this in a second. We can expect wave 3 to come to at least the 1 Fibonacci extension of wave 1. So those are the rules. Let's zoom out for a second just to see that. Okay, let's prove that. I know this is a little messy, so I'm going to erase this green line. Okay, so we're on the 15-minute time frame. Let's take our Fibonacci extension tool of wave 1. Okay, from the top, retracement of wave 2. And remember, wave 2 cannot retrace beyond the 618 of wave 1. Measure it for yourselves to prove it to yourselves. So you get wave 1, wave 2, wave 3 should come to at least the 1 Fibonacci extension. And so we haven't gotten there yet. But I expect wave 3 to be an extended wave. An extended wave within wave 3, okay? Not to confuse anybody, but you can also count 5 waves in wave 3. And here you've gotten wave 1, wave 2, wave 3. Here is truncated. It only extended. This wave right here is what I'm talking about. Sorry, right there. It only extended to the 1 Fibonacci extension of this first wave. So I expect the 5th wave of wave 3. Sorry, I said, okay, the 5th wave of wave 3 is likely to be an extended wave because this is normal. This is truncated. So I expect an extended wave. So all in all, I do expect wave 3 to extend to at least the 1618 Fibonacci extension. It's very unlikely, looking at this wave 4 correction, that wave 3 only end up at the 1 extension. Okay, it should come all the way to the 1618 at the very least. It can also go up to the 2, but I don't expect it to go to the 2 because wave 5 needs some space. And we have this big resistance here, right? This 3 months resistance that we've drawn out. Wait, looks like we may be breaking out. Maybe that was a WXY, not WXYXC. Looks like we may be breaking out right now. But anyway, the target is 39K, as I said yesterday. Yeah, we are breaking out. So yeah, so I expect wave 3 to come up here. thereabouts. Maybe it comes up to the 1236, but I think it's likely it comes to 1618. In any case, once we get that, then we get a wave 4 correction, right? Between the 236 and the 382 of wave 3, and then a wave 5. And remember, there is right now, if you are trading, if you're trading leverage, you'll see that the shorts are paying the longs. So more people are going short now. The sentiment is bearish. People think that the price is going to nuke down. Okay, and this is the power. This is the benefit of being able to really zoom in and have a strong understanding of the wave principle, because the wave principle can guide you through pumps and dumps, understanding the progression, the matriculation of price action through these 5-wave sequences, and sometimes 3-wave sequences if it's corrective. I do anticipate that once we do get here to this 3-month resistance that I'm going to show you once again and zoom out on, that we do something like this, give a flat correction down, okay? Where we're going to go, I'm not exactly sure. This is all conjecture, but like I said, it's unlikely that we go right through that resistance right now at this point, okay? And I'm zooming out on the daily just to show you all. For new subscribers, that white line is essentially the line that we formed in our 5-wave downtrend, okay, starting in November, okay? And we are in a downtrend, lower highs and lower lows. This is an impulse to the downside. We understand in Elliott wave theory that this is just wave 1 of 5. So extrapolating this down, going on the monthly, we understand that, well, we don't have enough data on this perpetual chart. So let's just switch charts for a second. I think this is important to state. Let's go on this index chart. Let's go on the monthly. It's important to state that we are not only in a downtrend. Let's go on log. But this is the first time you may hear people in our space, in crypto, say, oh yeah, I'm seasoned, I'm a veteran, I've been in this space since 2017. I started crypto in 2017, okay? And they say I've been through many cycles. For them, they ascribe that Bitcoin halving, right? That happens approximately every 4 years, right? 2 cycles. And there's some truth to that, but for those of us who understand Elliott wave theory, we understand that any asset, doesn't matter if it's Bitcoin, crypto, if it's a stock, any asset, precious metal, has cycles, and that those cycles can be counted in waves, right? Not necessarily the fundamental sort of aspects of it, whether it halves its, that's all well and good, and that may affect the price, but we understand there is such a thing called the wave principle, and a full cycle is 5 waves up and 3 waves down, okay? And no one, I repeat, no one in cryptocurrency has been through a full cycle. They've never been through a bear market. They call wave 2, wave 4, wave A bear market. Those aren't bear markets. Those are intra-wave, intra-impulse corrections. This is a bear market. No one's been through it. And this is why I really think it's so important, more than ever, to be able to read charts, to be chart literate, to have some clue as to what's going on. Because if you're DCAing there, it's going to be difficult for you, okay? Up until now, it's been an up-only type game where dollar cost averaging, you can close your eyes and still make it. And a lot of people in our space made it just by just throwing money into it. Maybe they read, maybe they didn't read, maybe they were correct, maybe they were incorrect. It didn't matter, because all you needed to do is wait just a little and the price goes up exponentially. That's what an impulse is. But now that 5 waves are in, you're expecting 5 waves down. Most people aren't ready for that, okay? Most people are not ready for that. Remember, these 5 waves can come all the way down, and this is a chart of Bitcoin from when it was a penny, by the way. These 5 waves can come all the way down to the 618 Fibonacci. So it can literally, quite literally, technically go to 0. When people say that, it sounds funny, it sounds like they're haters. It can literally do that and then go back up to 6 figures. That's the nature of price appreciation and price depreciation. That's the nature of the wave principle. That's why we're in the space, for massive gains and for asymmetric gains. But understand, where you have asymmetric gains, you also have asymmetric loss. So we're going into a different part of the Bitcoin cycle, of the cryptocurrency cycle that no one's ever been in. So when people tell you they've been through the cycle, they're basically saying, I do not understand the wave principle. I don't understand how price moves, right? In any asset, it doesn't matter. And crypto's so young. This chart is only 12 years old. For people to pretend to think that they have experience in crypto when the space is only 12 years old shows their ignorance as to the understanding of markets in general, of assets in general. Okay, this is why it's so important in 2022 rather, to be chart literate. Please, my friends, if you want to make it, the game has changed. It's no longer just going up. You also have to contend with this drawdown. Those in our space who are able to manage this drawdown that we're already in, we've started, they will be the new leaders, the new sort of winners, if you want to say, the wealthy, okay, in our space. I think this is so important. So I'm zoomed out on the whole monthly, but this is a daily show, and I zoom in on the 5-minute chart. And this is part of why I'm saying this is the best crypto, this is the best technical analysis channel on YouTube in the crypto space, because there are a few spaces where you can both get a macro view and also a daily kind of zoomed in view. And that is not just me, it's ascribable to the genius of the wave principle, Elliott wave, right? But it's not just the tool that you can say, I know Elliott wave, and not really know it and then try and use it. You have to master it. It doesn't matter if you're subscribed to the channel. You have to put the 10,000 plus hours in to mastering that, and it's going to pay off. I guarantee it. Okay, so let's switch charts back again and wrap this up. It's getting a little long. All right, now let's get off log. Let's go auto. Let's get back on the 5-minute chart. And yeah, we broke out. So this probably was just a WXY. So let's just change that really quickly. But see, you still get 3s. And that's the beauty of just tracking these corrections. You can practice them on a small time frame, you can practice them on a large time frame. Obviously easier to practice your patterns on small time frames, but it's time frame agnostic. So you're going to get answers either way. Okay, so that's what it was. It was a double 3 WXY, and then here's your breakout, your initial diagonal, and boom. So again, the target for me is the 1618. I think we're going to get that 1618 after all. If you're looking in terms of this third wave right here, 1, 2, 3, 4, 5, I expect that 5th wave to be an extended 5th wave. Okay, so that's what I'm anticipating. And then once we hit that target, I'm gonna personally take profit. We get wave 4, maybe another complex correction, because wave 4s tend to give us complex corrections, especially when wave 2 was simple, in which case wave 2 was simple. We got a simple correction in wave 2. So I expect a complex reaction wave. 4 means it takes a bit of time. We get WXY or WXYXZ. We hit our target finally, and then we get a zigzag correction and a retrace down. And let me just go over that. And I know this is a bit jumping the gun, but we have a little time. So let's zoom out on the 4-hourly, or actually let's zoom out on the hourly time frame. And oh yeah, guys, if you're appreciating this, if you're getting value from this, if you think this is a good analysis, right or wrong, please like the video, share it with anybody in this space that you think can benefit from sound, strong technical analysis, right, to inform their decisions, whether trading or investing. And subscribe to the channel if you're not yet subscribed. So looking at this, if this is indeed our zigzag correction, which it seems to be, right? A, B, C, we hit our resistance. What I anticipate is that this whole thing turns into an A wave, right? Then we get a zigzag B, right? Sorry, not a zigzag, a flat correction B, an A, B, and a C down to the origin point of this, or even extended. So this is where I could see us possibly testing 30K. Okay, it's possible because remember, a B wave can extend from the 786, and that's the minimum retracement of that B wave. So if this A wave extends there, we can go all the way to 28K in this B wave. Okay, because that's where the 1618 is, and then a flat correction for a C, which would finally break this resistance right there. That's what I'm seeing. Again, I'm not going to trade this immediately, but that's what I have in my head, gun to my head. I'm going to let price action show me, be deliberate, be careful, and then this is highly likely. This is a classic reversal pattern. All right, like, share, subscribe if you haven't yet. Thanks for watching till the end. I'll see you guys tomorrow.